Especially if it's a Canadian business, there's a capital gains exemption if they sell the shares and the shares qualify. And a lot of times that work has to be done 2 years prior to the sale of the business. And they've not bothered looking at that, and their advisors have not given them the advice to be prepared to sell properly as well.
Welcome to the Think Like the Owner series on the Bottom Line Show, where we speak with operators, leaders, and professionals about how they think one's growth and income are no longer the main constraint. The goal of the show is to bring real conversations to the forefront around the decisions that shape long-term outcomes, from capital and strategy to leadership, risk, and positioning. Bradley Crompton is the founder and managing director of Venture Business Solutions, a business brokerage and M&A advisory firm that helps entrepreneurs buy, sell, and transition privately held businesses across Canada and the United States. For more than 17 years, he has worked with owners of established companies in the $1 million to $10 million range, guiding them through valuation, succession planning, acquisitions, confidential sales, and ownership transitions during some of the most significant financial decisions of their lives. Prior to founding Venture Business Solutions, he held senior leadership positions in financial services, including serving as president and CEO of Canada Mortgage and Lending Corporation and managing director of Desjardins Financial. His career has been built around helping business owners maximize value, reduce risk, and prepare for the eventual transition of what is often their largest asset. What makes Bradley especially relevant for this show is that he sits at the intersection of business value, ownership, transition, and long-term planning, giving him a unique perspective on what separates businesses that are truly transferable from those that remain dependent on their owner. So thank you so much, Bradley, for joining me today and taking the time to be on this call. So I just wanted to hop into it and kind of mention your experience a little bit and note that you've been in this business for decades, working with business owners, succession planning, business sales, and estate planning, as well as wealth preservation. And one of the things you mentioned when we first spoke is how surprised you were by the number of successful business owners that you've spoken to and that you've seen over the years building their companies but haven't planned for what happens if they retire, become disabled, pass away, or sell. So I'm curious, after working with so many different business owners, what are some of the biggest planning gaps you continue to see?
Well, I think when they come to us to sell their business, one of the biggest gaps I see is just preparing early enough for the inevitable sale of the business. Especially if it's a Canadian business, there's a capital gains exemption if they sell the shares and the shares qualify. And a lot of times that work has to be done 2 years prior to the sale of the business. And they've not bothered looking at that, and their advisors have not given them the advice to be prepared to sell properly as well. And then if you're south of the border in the States, then it's also looking at the situation of the business and how it's set up and how easy is the transfer of the shares of the business to the new owner as well. So just a real lack of planning from the business owner. But I also put the blame on their advisors, their accountants, and their lawyers. Very often they're not giving them advice, or they're giving them poor advice.
So when it comes to how you think about businesses and when they're ready to sell, what's the most common mistake that you see that they've already made when they come to you?
I think number one is I see many businesses that would make them not qualify for the capital gains exemption. So one of the basic rules is 90% of the assets, including the cash, have to be actively used in the business, and yet the business will have a substantial amount of cash in the operating bank account, which would disqualify them. And many times I see their business property held in the operating company, which is really a dumb move as well. Number one, it doesn't qualify for the exemption. And number two, it leaves it up for creditors as well. So just those are the two number one I see people not being prepared to when they're ready to sell their business.
So is there a point where they may be thinking about a sale, but it becomes too late for them to do the proper planning?
Yeah, I never say it's too late. We can, like, I've got good accountants and tax people that we refer to our clients all the time. In fact, most of our clients will use a lawyer we have and recommend to them. It's very hard to find a good lawyer. So there is planning we can do at the time, but sometimes depending on how much work has to be done, it should have been done a little bit longer or a little bit longer or in the past, a little bit, like I said, 2 years ago, but we can still certainly fix a lot of the issues they have now. It just might take some time.
Okay, so then, in your opinion, why do so many business owners avoid thinking about succession and exit planning until the last minute?
I wish I knew the answer to that. I don't know. What I do in my business with my partner is we do a valuation of the business where we are today, where we think it's going to be in a year and 5 years. And that gets me excited. And I think if business owners did that now, I know that's one of your questions coming up. Well, what I do, I would look at my business now and come up with a valuation, say, wow, if something happens now, my business is worth X amount of money. If I keep growing it in 5 or 10 years, it's going to be worth more. So I think that would be a good thing for people to be able to look at for sure. But why they don't do it, I think people are just so busy, they're working in the business, not on it, and they just really ignore I think sometimes the most important things.
Definitely. That's something that I've noticed myself, people working in the business instead of on it and not really paying attention to these things, and not really even seeing that there's value in these things. So one of the questions that you mentioned to me when we spoke previously was, who gets your shares when you die? That's an important question to ask someone. So why is it such an important question, do you think, for our owners to start thinking about?
Yeah, I think when I, in my past, I'm 61 years old now. I've been working with business owners pretty well since I was 20, my early 20s. And a lot of times I think a lot of times they, it's really not their job, in my opinion, to think about that stuff. I think it's their lawyer's job to be bringing up the issue and the accountant. But the reality is, like, I'm in a partnership with my business partner. If I died, my wife would inherit my shares. She doesn't know how to run the business. My business partner doesn't want her as a partner. She wants to just get her value out of it. And it's pretty simple to me. You just got to think through this stuff a little bit. But I think what happens is when business owners do come up with this, they look for a solution, and then the advisors they have to make it so bloody complicated that it just never gets done. I've seen a lot of shareholder agreements in draft form that are just never completed. And I think one of the reasons is a lot of people just want to avoid life insurance for some reason. People don't understand it. Accountants, lawyers don't understand it, but it's an easy funding mechanism for if your partner dies or some life insurance. That's what I have in place right now. If I die, I know what's going to happen to my shares. My wife's going to get cash, and my business partner is going to have my shares. And it's pretty straightforward. So I just don't know why that's not brought up more. I think life insurance is kind of a dirty word for a lot of people, which is really too bad.
Yeah, can you go a little bit deeper there in terms of the shareholder agreement and buy-sell plan, having that in place, and why is that, or like what happens if they don't have that in place?
Well, I think what happens then is, like, so use me an example. If I die, my shares would automatically spousal go to my wife, and my wife would now have the shares, but she doesn't want the shares. She wants cash.
Right.
So what is she going to do with those shares? She possibly would sell them back to my business partner, but my business partner might not have the cash flow in the business to, if they're worth $1 million, to come up with $1 million. So it ends up both of them are stuck in a hard place. My wife is now a business partner in the business. She knows nothing about it. So it just ends up, it's a disaster. And I've seen this actually happen quite a few times in my life. And it's a relatively easy thing to avoid.
Definitely. So many business owners focus heavily on reducing taxes today. That's a conversation that I've been having quite a bit. How should they be thinking about preserving wealth over the long term?
I think that's a tough thing. I think number one, as a business owner, your number one asset's going to be your business. So I think it is focusing on growing your business, knowing what the value is of your business now, and what levers will increase the value. And I think a lot of business owners have no idea what those levers are. I think one of them is removing themselves from the day-to-day activity. It would increase the multiple, increase the value. And I think a lot of them don't think about that. But I think number one is that's your number one asset you have. how am I going to sell it? What's it going to be worth? And what's the way that I'm going to be able to achieve that for the most amount of money possible and the most tax efficient process possible as well.
Exactly. And as we know that there are very few tax-free strategies available in Canada. So can you explain a little bit about why life insurance continues to play an important part in that, in the tax planning?
Yeah, I think when you have the way that it works with a business owner is that the company can own the life insurance policy. It may be deductible. Part of the premium may be deductible if there's a loan involved, something they need to talk to their accountant about. But the bottom line is when the when the insured dies, the money is paid from the insurance company into the capital dividend account of the corporation, tax-free. And then many times the capital dividend account can be paid out to a remaining shareholder tax-free. So you're paying the premium with tax beneficial dollars. And at the end of the day, someone's going to get that money out of the business tax-free. So there is a way to kind of remove money out of there as well. Another way that I've seen a lot of people use is they'll buy a life insurance policy in a company that has a cash value. The first few years, the cash value is very low, but in most life insurance policies, that cash value builds up quite a bit, and they can end up buying that asset from the company, and then they'll have that asset in their hands personally, and then the cash value will build up. So it's a way to get some money out of the company in a very tax efficient manner for sure as well.
Like you said earlier, life insurance has become such a touchy subject for most people, not just business owners, but everyone. They get a little bit afraid when you say life insurance. What misunderstandings do you think that especially business owners have about the term or the word life insurance, or using insurance as a planning tool?
I think it's kind of like a car salesman. It's up there in the same boat. People just have a really bad reputation. But I also think it's really up to the broker or the advisor that they come across professionally. They're going to check the market. They're not just selling one product. They're doing the best for their client. And I think, look, sophisticated business owners, they're not afraid of the word life insurance. They know it. They have it. They're willing to look at it. I think it just depends on that level of the business owner. A small business owner, it might scare the heck out of them. They might not be able to do it properly financially, but I think, your medium and larger size businesses, they're totally open to the ideas of life insurance. They just have to understand it, and they probably never had anyone properly understand or explain to them the capital dividend account and how a shareholder agreement could be funded and so forth. I know from my experience, I've never seen an accountant explain to a business owner why life insurance might be a good option, which is really too bad. It's quite a shame.
Yeah. So how far in advance would you say that someone should be realistically begin preparing if they're thinking about maybe one day they want to sell their company?
I think from my perspective, it's never too soon. I'd reach out to someone like my firm and say, I'm thinking of doing this in 2, 3, or 4, or 5 years. Mm-hmm. What do you think of the business now? Can you give me an idea of the ballpark? I'm always happy to give someone an idea of ballpark evaluation and then their deficiencies and what they could do to improve that. And I think also saying, look, if you sell it in 3 years, what's it going to be worth? So I think it's never too early to start looking at possibly valuation now and what they can do to improve. And a lot of times I'll see items like the property in the operating company, too much cash in there, and then it doesn't qualify for the capital gains exemption. And that's something they can relatively easily fix as well.
Mm-hmm. Yeah. So if you could sit down with every business owner in Canada for just 5 minutes, what's one conversation you would insist that they have immediately?
Well, I think number one is, what's your business worth right now? I mean, why are we in business? We're here to make money and a profit, not save the world. We're here to make a profit. And one day you're going to die and the business is going to die, or you're going to sell the business. So let's prepare for number two. So why not know, hey, here's an estimate of what my business is worth now. And if I keep growing it at 5% a year, it's going to be worth X amount of money in 5 more years. Because business owners go through a lot of grief. It's the hardest thing in the world to start and grow a business. I've done it many times. It's very difficult. Business owners speak a different language to the regular person. And I think it's very powerful in to say, if I sell my business now, it's worth this. And if I just keep chipping away at it, it's going to be worth more money down the road. It gives them a little bit of hope. and a little bit of a strategy to be able to exit their business down the road as well. So that would be number one, know what your business is worth and how to continue improving the value of your business.
So if there are business owners who are listening to this, realizing that they haven't been thinking about this and not as prepared as they thought they were, what would be the first step that they should take this week?
I think understanding the value of the business, and then I think you've got to look at risk. You've got to look at what happens if you're in a partnership. Again, we talked about that a little bit earlier. What happens if you or your partner dies?
Yeah.
I'd also talk about what happens if you become disabled and can't work. That happens all the time. I've had 4 clients this year have strokes, crazy amount of people having strokes.
Wow.
They've been able to go back to work, but I would look at what happens if you or your partner dies and what happens if one of you becomes disabled and cannot work any longer. Again, life insurance for death. And then there's disability plans that they're designed to fund exactly shareholder agreements as well. So I would look at that risk. I'd look at the value, number one. What do I need to improve the value? And then I'd look at the risk. How do I make sure that I get there down the road?
Amazing. And for someone who wants to explore this a little bit further, where should they find you, and or what type of owner should be reaching out to you?
Yeah, we're dealing with business owners that have $1 million of revenue or above. And if you're at that stage thinking, at one point you're going to sell your business, and I think everyone, no matter what age you are, if you've got a mature type business, you should be looking at that. By all means, they can reach out to us at our website and set up a call with either myself or one of my other partners for sure as well.
Amazing. So thank you so much, Brad, for having this conversation with me. I think what stood out to me the most is that a lot of business owners don't even understand the problem that they have yet. And they also have a lot of unanswered questions that maybe their lawyer and their accountant not only are not even bringing in front of them, but just don't know the answers to. So that's why I think that it's so important to be able to sit down in front of someone like you, who have so much experience and so much understanding in this arena, to be able to get the right answers and find the right information to make sure that they're set up for the future that they're trying to create.
Yeah, and I think it's speaking their language as well, not accounting speak, complicated, just get down to the bottom line, speak English. Here's the issue. Here's the solution. Don't make it overcomplicated. I think accountants are great. They do a good job, but they're very much fact finders and they may give too much information or the wording is very complicated. And I think business owners need to get good information quickly and be able to make a decision quickly. That's what I think they're looking for sure as well. Yeah.
Exactly. I think the best, as you said, the best time to plan, the best time to make the decision is before everything becomes urgent.
Absolutely. Just reach out. A short phone call gives you some good insights. There's no cost to do it with us at all. And, have a little bit of a plan and get excited about selling the business. I mean, that's what we should be excited about, selling and going on to the next chapter of our lives, not being stuck in this business indefinitely, not knowing how the hell you get out of it.
Absolutely. Right? So thank you again so much for taking the time to be on this call. I really appreciate your insight and perspective.
Glad to be here.
That's it for this episode of Stealth Audio. Real conversations with people building things most others only talk about. If you'd like to share your story on the show, or you're ready to build your own Stealth 30 system, you can apply for either at growingwithdiana.com/stealth30.